Welcome everyone. Thank you for joining us today on BIA's show called Decentralized Discourse. My name is John Tan and I'm the CEO of Alchemy Pay. Alchemy Pay, alongside other industry leaders such as Polygon Network, Near, Neo, and other leaders, have launched an alliance called the Blockchain Infrastructure Alliance. In short, we call it BIA. And BIA's main goal is to solve the underlying challenges in the blockchain industry that is acting as roadblocks to the adoption of cryptocurrency and blockchain technologies as a whole. And so today, it's a very exciting day for BIA, as this session is going to be the first of many sessions that we'll be holding, dialogues with blockchain industry leaders, academics such as Professor Johnson. So Professor Johnson heads up entrepreneurship at MIT Sloan School of Management, MIT Global Economics and Management Group. He was also formerly the Chief Economist of IMF and was on the advisory committee of US Treasury Office of Financial Research. So now, without further ado, I'd like to invite Professor Johnson to introduce himself.
Thanks for the kind words and for bringing me on your show today. As you said, I've got quite a lot of experience both in entrepreneurship and international macroeconomics, including issues related to money and payments and finance around the world. And I'm delighted to be with you today to talk about those issues.
Right. Thank you, Professor Johnson. And in the course of Professor Johnson's work, he has published many of his research papers and his opinions, and many of this includes his opinions on the payments industry, as well as the role of cryptocurrencies and blockchain in the payments industry. And this is why BIA has reached out to Professor Johnson to have this conversation today to figure out, what are the upcoming trends and how can we try to tackle these issues before they become a problem for our industry. So I would like to start with a few payment-related questions before moving on to other exciting topics such as DeFi, CBDCs, and regulations. So first off, for the payments-related questions, we have this. You said last year in an interview for MIT that you think that future of payments will be profoundly different in 5 to 8 years. In what ways do you think that payment sectors will change, and how much of this evolution do you think will be driven by distributed ledger technology such as blockchain?
Well, those are great questions. To take the first one first, I think that payments are going to become much more digital than in the past. And we've seen the pandemic really have that effect. So I like cash. I carry cash. I haven't used much cash, I have to say, in the past 18 months. And I think that general pattern is going to spread through all our transactions. Now, second question, though, really interesting. Is this going to be run through, let's say, either existing intermediaries, so some version of the banking system, the credit card system, new intermediaries, which could be big tech companies or they could be startup industry, but intermediaries, or is it going to be in some genuinely decentralized fashion, like Bitcoin or the systems inspired by Bitcoin? I think the jury's still out on that one, John, and I think there's competition between profoundly different models for making payments, and that's a good thing.
And do you think that peer-to-peer digital payments will become the norm in the future? And how do you think that will affect society and our current financial system?
I think some form of peer-to-peer payments, as in, we share a cab ride, and I don't give you $20 for my part of the cab ride. I give you a digital transfer of some form. Now that seems pretty compelling and obvious, and it's going to happen. Whether, of course, that digital transfer is genuinely without intermediary remains to be established. But why should we pay any transaction fees on that kind of thing? Just like I hand you a $20 bill, why can't I hand you 20 digital dollars with zero transaction cost at that level? So I think some version like that is coming. Whether that becomes a bigger, more expanded, decentralized finance ecosystem, or whether such a system has a large share of all of finance, I think that remains to be seen. And the really good thing about what you and your colleagues is doing, John, obviously, is you're putting pressure on the big finance companies and the big tech companies to really up their game. Now, they have a lot of money, they have a lot of resources, and I think particularly the big tech companies John, particularly those that already have or have established large social networks. I think the next move is going to be with them, and we'll see how they do with it.
Right. And do you think that privacy would be one of the main driving factors for people to start to adopt a decentralized way for peer-to-peer transactions, or do you think that the cost of transaction will be the main driving factor?
Well, I don't think anyone wants to pay fees, and of course, in the existing system, they don't feel the fees. So maybe that friction. We'll see how important that friction is going forward. Privacy, sure, is important, and privacy safeguards, I think, need to be built in to all of these systems. And the incumbents are getting better at that because of the competitive pressure. I don't think they're particularly good right now, but obviously, many of the developments we've seen over the past, let's say, 5 years around social networks have made people more and more concerned about control over their data, who's doing what with my data, and so on. So that space remains to be entirely sorted out, I would say.
Hey, thank you, Professor Johnson. Next up, we would like to move towards the topic of decentralization. So, how realistic do you think is the overall aim of DeFi to decentralize finance? We see top 10 blockchains like Binance Smart Chain and Ripple benefiting from a high degree of centralization in terms of scalability and functionality. So, will new points of centralization inevitably occur in our pursuit of decentralized finance solutions?
Well, I don't know if they're inevitable. Nothing is inevitable, really. But yes, I think you put your finger on a very good point there, John, which is that in the new tech space, let's say, that there's a really fundamental difference between new players who are intermediaries with as you say, a substantial degree of centralization because there are economies of scale and scope. Actually, very much, if you go back 400, 500 years and look at the origins of our existing financial system, that's exactly what happened in that respect too. And then, of course, we have the really completely, totally decentralized versions, of which Bitcoin is the clearest version. And it remains to be seen to what extent fully decentralized will be able to outcompete the more centralized new intermediary model. I think that is really up for grabs right now. Of course, the original Bitcoin vision was to become a payment system, including a micro payment system. And let's be fair and frank, that really hasn't happened. It's a store of value, and it's a speculative asset that many people derive great value and enjoyment from. But it's not a source of micro payments. So I think the balance has shifted towards the new intermediaries, and I think you're right. We've got the ripples, which are brand new in this space, but we've also got the social networks such as Facebook/Meta that I think are really have the next move to make in this game.
And on the topic of Bitcoin, as you mentioned, perhaps it's not the best tool or medium for peer-to-peer small sums exchange, but do you accept or contest that Bitcoin has already achieved decentralization? And do you perceive that any particularly powerful forces are pushing Bitcoin or crypto at large in either direction when it comes to centralization?
Well, I think Bitcoin is fully decentralized. Obviously, there's questions about mining and mining power and the power of various groups of miners when they get together. I think there's always be some question marks there because it's not fully transparent. But I think Bitcoin is as decentralized as you can get, and it's an impressive achievement. However, in terms of directing the technology, shaping the technology, the functionality of the technology, I think we've learned the limitations of being fully decentralized. Energy use also, John. I mean, that is the number one concern I hear about Bitcoin. So to what extent can it shift towards a less energy intensive proof of something? Again, remains to be seen. So more centralized, more directed, more controlled intermediaries have a potential advantage, including on the energy front, perhaps.
That makes a lot of sense. Yeah, and I guess this question I would like to ask you a little bit more on DEXs, decentralized exchanges. So 3 years ago, and I really thought that this was very impressive, you were really discussing decentralized exchanges and smart contracts. What do you think of DEXs now? Do you think that things have progressed faster than you have expected? And do you think DEXs such as Uniswap or PancakeSwap are moving in the right direction?
I think it's gone a bit slower, actually, John, than I expected. I thought we would find more uses, and I thought they would spread out. I think the friction here is perhaps being overcome. I don't want to understate the dynamism, but I think consumer protection, investor protection, people feeling confident that they can get their money back if something goes wrong. I think those are key factors, not just for the regulators. I think those are key factors for participants also. Why should meme stocks, for example, have become such a sensation in the last 12 months, more than rather more decentralized forms of financial activity? Many people have been sitting at home playing with their computers, looking for ways to use spare cash or desperately trying to earn money, depending on how you think about it. And yet, I would have thought that decentralized exchanges would have got more of a boost in this moment. So I think there's some very basic issues about custody and about investor protection that still need to be overcome in the mind of the consumer.
Right. And do you think that DEXs have progressed a little bit slower than you have expected because consumers or investors, they are not overly concerned about the security of their assets on using a centralized exchange? Or do you think that just people don't understand DEXs enough to understand what are the different benefits, such as the other use that they could get from liquidity mining, for instance?
Well, I think it's probably a bit of both. I mean, when you say the consumers don't understand it, I think they understand quite well that there are promises, but they want to see exactly what happens in various stress scenarios or as these ecosystems develop. And then I think most small investors want to be confident that their money is not going to evaporate in some fashion, either because of a software glitch or because of actions by various people who are, they didn't realize they were involved in the chain of custody and they can hack into it, or whatever verb you want to use there. So I don't think consumers are stupid or unsophisticated at all. I think they're careful and they're aware that many things go wrong, particularly when people offer you new financial instruments. So I think that those concerns need to be addressed and are being addressed, to be clear. But I would have thought we could make faster progress there.
Okay, thank you for answering that question. Moving on to DeFi. So, as someone who advocates for a healthier financial system that benefits society as a whole, what do you believe is the most critical for DeFi to develop in an ethical way?
Well, I think at this point you have to come within the regulatory perimeter in a reasonable fashion. I don't think anyone wants onerous or crushing rules to be imposed. I don't hear those proposals at all. I think, though, there needs to be better and very high standards of investor protection. I think the U.S. Securities and Exchange Commission is thinking about these things in a rigorous, but to my mind, entirely appropriate way. And the industry needs to get organized and really engage with them.
Mm-hmm. And do you think there are problems occurring in DeFi that we are already seeing in traditional finance? What are the problems that we should be anticipating, and how can an industry alliance like BIA help?
Yeah, look, traditional finance has got many problems, and you don't have the same problems, thank goodness. You don't want to go anywhere near those. I think alliances and representations across the ecosystems around blockchain, I think that's a very good idea. And I think articulating exactly what are the issues that the regulators are putting forward, that you're seeing from central banks, that you're seeing from other people with concerns about investor protection, I think those are important. And thinking hard about systemic risks and the way in which stablecoins, for example, may come to pose a systemic risk. I think that would be very healthy too. I think that's ahead of the game. That's where you want to be. You want to be ahead of the game, ahead of the concerns, ahead of the officials. And I'm optimistic that if you take that kind of approach, you'll make good progress.
Okay, and on the topic of these stablecoins, right? You mentioned stablecoins. So BIA will include includes stablecoin issuers and developers. And we believe that stablecoins can be a positive part of modern finance by allowing people throughout the world to easily access a currency more stable than their domestic currency. And it will also allow them to move funds globally at much lower cost. What do you think are the potential impact of stablecoins on the overall stability of economic exchange?
Well, I do think stablecoins are the next big topic. I think that Facebook Meta is going to really push us hard in that direction. Now, that stablecoin, or the stablecoins as envisaged by them currently, would of course be linked to the dollar. So it's not something that's more stable than the dollar. The claim is it will be as good as a dollar. And then, as you said, you'll be able to do things with it, including transfer it across borders potentially in a very low cost way. And I think that's going to happen, John, because Facebook wants your data always, right? So they'll give you low cost transactions because the value to them of being in the flow of information that generates is pretty colossal. So that is, stablecoins are going to be important. Stablecoins, I think, pose risks, because if you let your entire financial system drift over in that direction and you don't have sufficient safeguards, particularly around what happens in a crisis, then you can have, the kinds of difficulties we've seen, for example, in the past around money market mutual funds and other traditional finance instruments that do have the feature of trying to give you a representation of a dollar that they claim can be exchanged always and exactly for $1. So I think there are some landmines to avoid in this space, but big tech is absolutely well positioned to move in this way, and that I think can help the stablecoin industry more broadly. Although I do really think we have to be careful about the systemic risk issues and get ahead of those, in addition to dealing with all the investor protection issues.
Right, definitely. I think that's the biggest elephant in the room. Everybody is just, very concerned. What if one day, USDT collapses, right? Nobody really knows what's going to happen next. And on the topic of stablecoins, I think what comes and flows very naturally next might be CBDCs. So, I was very fascinated by your conclusion to an article published in Project Syndicate in July, in which you mentioned that CBDCs could be the answer to the next global financial crisis. And many of this decentralized world view emergence of CBDCs to be moving against the entire cost of cryptocurrencies. What are your opinions on this? And do you see any middle grounds or scenarios where CBDCs and cryptocurrencies can work hand in hand?
Well, I think they are antithetical at this point, because one is the central bank, right? So it's the epitome of centralization, or even at least the centralization we've had over the last 100 years, central banks trying to get in the digital payments game and trying to provide a platform in which you can build other digital applications, compared with people coming from this Bitcoin, let's decentralize as much as possible space. Can they? So I think that the central banks are feeling enormous pressure to upgrade, improve, reduce transaction costs around their systems and so on. And I think that's a good thing. And I think, as you said, CBDC could potentially be used in various scenarios in a helpful way from a policy perspective. Could they interact with crypto? Sure, absolutely. I mean, I think there's various ways in which that can be done. Again, though, we come back to these issues of, how is investor protection being treated on all sides of that, particularly on the crypto side, and then what are the systemic risk implications? How do we think about those? How do we make sure that the system that we either build or allow to develop can't collapse? Those are legitimate questions, but big change, John. 10 years ago, central banks would have had nothing to say about this. 5 years ago, they didn't want to talk about it. Now, they at least in private, have many conversations along exactly these lines.
Right, and I think if we were to think about, let's say CBDCs were to become, every government were to have their own CBDCs, and it would mean that, global exchanges or transactions will become so much cheaper, and probably even cheaper than, use of stable coins on the blockchain, right? So do you think that if using CBDCs is going to be cheaper than using a stable coin for as a medium of exchange, will stablecoins eventually phase out when CBDCs are become the mainstream way to transact?
Well, that's a good question. I'm not sure that the central banks want everyone to have a substantial part of their assets with the central bank. I think they see it as a, just like you carry cash, or maybe you don't carry cash anymore. Just like I used to carry cash with some amount, but not as large part of my financial assets. Instead of carrying this analog piece of paper, I could carry a digital central bank, digital currency in my wallet or on my phone or whatever. I think that's how they envisage it, and then they imagine that this could be part of and continue to work with the existing financial system, because they don't want banks and traditional forms of credit to collapse. I mean, that's the central bank perspective. I think, John, stablecoins have got a big advantage here if they organize themselves properly and don't rush any shortcuts. Because if you've got global big tech, and it's not just Facebook, Meta, but I think it's also Apple, and I think it's Google, and I think there are others who could play in this space. I mean, they already have, John, a global reach. Those companies are literally everywhere. They have robust networks, as far as we can determine. Okay, there are occasional outages, but largely robust. And they have a presence in the mind of the consumers almost everywhere. So I think the big tech really has the advantage in this moment. I mean, it shifts back and forth. And I think big tech will be drawn to stablecoins, which are not the same thing as central bank digital currency, as you know. So that's the next move. And then how that impacts CBDC and then how crypto responds to that, I think remains to be seen.
Right. Okay, that makes a lot of sense. But do you think that governments, since many governments are right now looking into CBDCs, right, would they actually start to work together and, put up regulations that would outright ban the use of stablecoins? And if that happens, and if do you think that could happen, and what would be the impact of that happening? The ban of usage of stablecoins around the world.
Yeah, governments don't work together very closely on much, as you know. There's no concerted push to ban stablecoins that I've heard of, and I think that would be seen by many governments as premature, inappropriate. Certainly G7 governments and many G20 governments like to encourage financial innovation because they do feel that lower transaction costs, more financial inclusion would be a good thing. I think the issue with stablecoins will be very much like money market mutual funds, which is, are we creating something that is an appropriate, additional way for people to make payments or manage their assets, or are we creating something that is likely to blow up in a crisis and therefore a cause of concern? That can be overcome by the stablecoin industry or by leading players committing themselves to only hold fully 100% liquid assets. Let's say in the US Treasury, US dollar case, if you only held short-term Treasury debt, that would obviate that problem. And then the question would just be, how do we know that's the only thing that you hold? And how do we know that as you become really big and powerful, you won't, chase yield by going out and trying to hold some high yielding assets? So I think subject to being able to deal with those questions, I think the stable coins have got a big potential advantage. And I don't see any attempt to outright ban them. Now, if there's a crisis and if stable coins are at the center of that crisis and don't perform well and create many knock-on problems, sure, yeah, then you get a lot of additional concern about what to do. But money market mutual funds still exist with more rules, admittedly, but they still exist despite the fact that many of them almost melted down in the fall of 2008.
Right. Next up, I would like to, we're talking about CBDCs, and now maybe I would like to touch a little bit more on regulations. So BIA is very much focused on sharing ideas to develop the industry as a whole. And one aspect of that is to bring a united cryptocurrency industry to regulators around the world. And you said at MIT Technology Review in 2018 that members of the cryptocurrency industry should be proactive and try to explain how, this industry would be great for the US to develop and why they should have appropriate regulation around that. And we have recently seen that Coinbase stated that during a 6-month period of dialogue, they have answered all of SEC's questions in writing and then again in person, but they claim that they did not get much of response from the SEC. Is there a way a united crypto or blockchain industry organization could help to mediate this issue?
Well, I don't know anything about the Coinbase specifics, so I don't want to address that. But sure, absolutely. This is why we have industry associations, so that nobody says, if one company says, again, I'm not talking about Coinbase, but if one company says, look, I went to the SEC, they wouldn't let me do reasonable things, what's going on? We say, well, I don't know. What exactly did they say? What was the conversation? What are they asking? But if it's an industry association, if it's being quite transparent, and as you know, in the US, we have a very permeable democracy at the top. So there are many people on Capitol Hill. There are many places in the country that would like to encourage financial innovation, including crypto. There are many people you can get on your side, particularly if you're offering better service and good investor protection. So I think associating like that in the US context is a very good idea. I also think that getting other countries on board, countries where there is, let's say, more unified or centralized decision-making in the policy space, that could also be a good idea. If you find a country in Asia or in Europe or Canada, people like to talk to Canada, there are many reasonable people in the central banks and the regulatory space, the UK, for example, where you can have the conversation and perhaps you can persuade them, again, in an industry format, to create rules and opportunities that can then be shown to other countries like the US and say, look, this works in this country. Let's try a version of this in the United States. So I think there's many ways to approach that. It is a bit of a political campaign, I will agree. You don't just march in there and say, this is what we're going to do, sign here. That's not how it works. But I don't think anybody in this space has many illusions at this point on that issue.
Right. Okay. I guess BIA could be the party that would try to facilitate, help regulators figure out how to really, I wouldn't say put control to this industry, but help them regulate this industry by providing guidelines, from all across the world. Because we believe that, at least for Alchemy Pay, we what we face is regulations is the biggest challenge to adoption right now for cryptocurrency payments, right? So hopefully one day BIA could become the party that will help governments to regulate the industry as a whole.
Well, yes, try. I would encourage you to do that. I would also emphasize, if it hasn't come, just because it hasn't come up yet, the anti-money laundering and know your customer rules, which are, I think, regarded by many governments as really of fundamental importance in the modern world, and not to be ignored or not to try and shortcut those at all. I think if you can persuade people you've got investor protection, KYC, and the systemic risks are not going to mount up, I think that's a very interesting conversation to have.
Right. That was the last question that we have for you, Professor Johnson, and we have covered a lot of ground in this short conversation. I would love to cover more, but I understand that you still have a whole day ahead of you. It's 7:30 a.m. right over there on your end. So let me say thank you again on behalf of Alchemy Pay and the newly formed Blockchain Infrastructure Alliance, BIA. We sincerely appreciate you for your time today, and we hope to have another chance to have another engagement with you in the very near future.
Very nice to talk with you. Good luck.
Thank you so much, Professor Johnson.
Bye-bye.